looking ahead to the meeting beginning March 9th. It's all about the coronavirus still in markets, and there are two events that we're watching which we suspect probably has been heavily influenced by the coronavirus. The first is the ECB meeting. Now, there wasn't any big expectation for this meeting, but now with the ECB having to fight off the coronavirus, we're thinking maybe there might be a rate cut at this meeting. And we have the first UK budget in 18 months. And it was always expected to be a bit of a high spending budget, but now the focus may be more towards emergency funding to make sure the UK is protected from the coronavirus. Now, in terms of a general backdrop in markets, we've been very volatile is the best word to describe it. Stock markets have been up and down. If you look at the Dow Jones as a proxy, it's been up and down 100 points, multiple hundreds of points every day. There's been no discernible trend. You can argue that perhaps stock markets are trying to find a bottom, but unsuccessfully having done so far. In Forex markets, the surprise emergency rate cut from the Federal Reserve undercut some of the strength in the US dollar, so the dollar's been trending a little bit weaker. We also saw an emergency cut at its scheduled meeting of 50 basis points by the Bank of Canada, so the loonie's been under pressure as well. Oil prices, it's been all about that OPEC meeting and their decision there for a cut, which at the time of filming is actually not yet confirmed by Russia. And so there's still a little bit of a tentativeness about the oil price as we film this. Gold prices, we had a massive $50 gain on Tuesday. And so now consolidating those gains, but the trend remains very much to the upside in gold. Now just switching gears to the economic calendar. Gross domestic product in Japan will be of interest. This is the latest iteration. We're suspecting it's going to remain still negative 1.6% quarter over quarter. From China, the data is obviously relevant at the moment, but the focus is actually shifting away from China slightly at the moment and more to the spread of the coronavirus and its effect more globally. But nonetheless, we do have the consumer price index to watch, also GDP out of Europe, and the US CPI will indeed be one to watch as well. We're actually expecting a slight moderation in US inflation, which would make sense if economic activity is pulling back. And it's actually what you want to see at the moment is lower inflation, given that the Federal Reserve are aggressively cutting interest rates. You wouldn't want to see the Fed cutting rates at the same time that inflation is pushing higher. That's completely counterintuitive. So talking about this ECB meeting, as I mentioned, there are now some calls just in the last 48 hours really that the ECB cuts its deposit rate. Now, if you remember, the deposit rate is currently sitting at minus 0.5%. The expectation out there is that they might cut the deposit rate down to minus 0.6%. It goes without saying that this is pretty token stuff and it's not really going to do anything other than slightly grease the system a little bit in case there is greater concern out there. Clearly a 0.1% cut in interest rates, and I was saying the same thing when they did this the last time, is not going to actually do very much. And indeed, we're seeing the euro push higher. Now, the chance for fiscal stimulus in Europe, at the time of filming, we're waiting to hear from Italy and how much they're looking to spend. Could be somewhere between the region of 5 billion and 20 billion euros as an emergency spending fund for the coronavirus. We're likely to see other similar packages in other European nations. And of course, Germany is the big one. And they tend to be the most fiscally conservative. There are things in the German constitution that stop them spending too much. So that is the big one. If Germany actually does start to spend some of its surplus, then actually Europe would be in much greater shape than it is currently under the lower government spending. Of course, that's all designed to combat the coronavirus. But the point being, the small moves likely to be taken by the ECB, even if they promise to do more, at the moment is being undone by that promise of fiscal push, which should be euro positive when the monetary action would be euro negative. Now, I mentioned the other thing that we're going to look at is the UK budget. This will be the first budget for new UK Chancellor Rishi Sunak. He is only fairly new into the job, hadn't been a cabinet minister before, so quite a big test for him. As I said in my introduction, the hope was that this was going to be a big spending push led by Boris Johnson's government in order to level up across the country, as he frames it, so i.e. helping the middle of the country in the north, the Midlands in the north. But actually it might end up being more of a response to the coronavirus. And if the OBR is projecting weaker growth in the UK, then there's actually just less money to spend. So that means that the government might have to moderate their plans a little, or just delay for a year perhaps, or even to the autumn, until the autumn statement to announce a more concrete, grander scheme plan. So there are some other things to think about in this budget. Made a note of some things here. The inheritance tax changes, mansion tax changes, the IR35 rules, air passenger duty. These are all of interest, but probably not too material if you're just trading the British pound. Right, that's it for this week. Thank you very much for watching, and if you do get some benefit out of these videos, please make sure to like and follow them and subscribe us on all the normal social media channels.